Hello guys, in last video we discussed up to straight line method. If anyone not yet subscribed our channel, kindly subscribe, bookmark. In this video we are going to see from continuity, diminishing balance or write down value method. The main difference between straight line method and write down value method is, in case of straight line method, that depreciating amount is equal in every year, where in case of write down value method, that depreciation amount varies every year. Let's see how it varies with an example. For example, original cost of an asset is 20,000 and depreciate at the rate of 20% every year. So, in first year, what is the depreciating amount? 20% of 20,000. So, 20,000, 20%. Depreciating amount is 4,000. At the end of first year, the value of the asset will be 16,000. 20,000 minus 4,000, 16,000. At second year, what will be the depreciating amount? 20% of 16,000. In second year, the depreciating amount is 3,200. Value of asset at the end of the second year will be 16,000 minus 3,200. 12,800. In third year, the depreciating value will be 20% of 12,800. 20% of 12,800. So, the depreciating value will be 2,560 and value of asset at the end of the third year is 12,800 minus 2,560. So, value of the asset will be 10,240. And fourth year, 20% of 10240. 10240 into 20%, 2048. The value of the asset at end of the fourth year will be 1024 minus 2048. So 8192. In fifth year, 20% of 8192. 16.404 and value of the asset at end of the fifth year will be 6,553.6. Where in case of straight line method, that depreciating amount will be equal. It will be equal in every year. Year 1 4,000 means every year it will be 4,000. But in case of write down value method, the depreciating amount varies. Okay. This is a depreciating method in which percentage rate is applied to residual balance rather than original cost. Percentage rate is applied to residual balance. This is the percentage rate. This one is a residual balance. The depreciating amount decreases every year and it also varies every year. So diminishing every year, it is diminishing. So you can keep in mind diminishing balance. Every year depreciating amount is diminishing. Okay, they given an equation: annual depreciation equal to previous year value into percentage change. For if you want to calculate for second year, previous year value, this is a previous year value into percentage rate, previous year value into percentage. One more example they given. The data is same as illustration number 1. So Patel Transport acquires a truck on 1st October 2017 at a cost of 4 lakh. Is purchased a truck at a cost of 4 lakh. Depreciate at 10% every year. We have to find the depreciating amount by write down value method. Purchasing in October 2017. First year, what will be the depreciating amount? So 10% of 40,000, 4 lakh is 40,000, but they are purchasing a truck at October. They are purchasing in October. Every year, book closes at 31st March. So October means November, December, January, February, March, April, 6 months. So half year, 1 year 40,000 depreciating means for half year divide by 2, 20,000. At first year, the depreciating amount is 20,000. So at the end of the first year, that value of the truck will be 3,80,000. Okay. In second year, depreciating amount 10% of previous year value. So 3,80,000 into 10%, 38,000. At second year, depreciating value is 38,000, and then value of the machine at end of second year is 3,80,000 minus 38,000, 3,42,000. In third year, the depreciating value is 10% of previous year into 10%, 34,200. The value of the machine at end of third year will be 3,07,800. 3,07,800. So at the end of third year, 3,07,800, 3,07,800. So in straight line method, the value is 3 lakh. In straight line method, the value is 3 lakh. In write down method, the value is 3,07,800. That depreciating amount reduces. And then depreciating account, that corresponding 20,000, 38,000, 34,200 is kept in depreciating amount. Here they are given in ledger format truck account and depreciation account, but in exam they are going to ask what is the depreciating amount, what is the value of the asset at the end of third year, what is the depreciating percentage. Like this one they are going to ask. They will not ask how we are going to write in ledger in case of depreciation. Anyway, this ledger journal will be explained clearly in module B. Advantage and disadvantage of straight line method. Advantage: it is simple method to calculate. Once for first year, if you find out the depreciating amount is same for everything. Okay, it's very simple. No variation in amount of depreciation every year. It will be same. That disadvantage is that depreciation is not going to be same every year. One thing, and one more thing, first year depreciation will be more and second year depreciating will be low. And one more thing, expenditure will be low on for initial stage and it will be high at the later period. Okay, advantage and disadvantage of write down value method. This method is recognized under Indian Accounting Standard 16. So we are using this method in Income Tax and Company Act. In this method, that depreciating amount is equal to the repair and renewal amount. Disadvantage. The main disadvantage is we can't able to make the book value 0. Look, here it became 0.6. Anyway, how many years you will depreciate also, at last it will be in a decimal value only. You can't able to make it to 0. Difficult to understand as there is a variation in depreciation. So there is a variation. So it is difficult to understand when compared to straight line method. Okay. Next we are going to see about unit of production method. Okay. According to accounting standard Indian Accounting Standard 10-16, three methods is recognized for depreciation. One is straight line method and one is diminishing balance and third one is unit of production method. In straight line method and write down value method, depreciation will be calculated based on time. Time is included, but in case of unit of production method, we are not going to use the time. Passage of time is not we are going to use. We are going to use the how much we used that machine. Okay, use of the asset. A formula is depreciating amount during a period equal to actual production. Actually, what we are going to produce or usage during the period divided by total expected production. Totally how much it can able to produce or usage during the life of asset into total depreciable amount. For example, a company purchase a pen production machine. The machine can able to manufacture 10 lakh pens. Okay, that machine can able to manufacture 10 lakh pens. After it will be scrapped, we can't able to use it. After producing 10 lakh pens, it will be scrapped out. The purchase of the machine is that new value of the machine, that purchase value. That purchase value is 1 lakh and the scrap value is 10,000. Okay, during the first year that machine produced 2 lakh pen. First year produce 2 lakh pen. Now we have to find the depreciation amount for first year. What is the formula? Actual production. So your actual production is 2 lakh divided by total expected production. We are expecting that machine can able to produce 10 lakh pens into total depreciable amount of the asset. So that value of the new machine is 1 lakh. Anyhow, if we scrap out the machine, we will get the 10,000 back. So we are minusing 10,000. Suppose scrap value is 0 means we want to write here 1 lakh only. By solving this, we will get 18,000. So for first year that depreciating amount is 18,000. So in this problem we didn't use the time. That depreciating value is based only on how much we are using the asset. Okay. Next one, sum of the year digit method. For example, that life of the asset is 10 years. For example, that life of the asset is 10 years means we want to write in reverse order. 10 plus 9 plus 8 plus 6 plus 5 plus 4 plus 3 plus 2 plus 1. What is the value? 55. So this is called sum of years. So this is called sum of years. So now question is, in first year the asset would be depreciated at what rate? This is 1 first year, 1 2 3. This is first year, 10, this 10 divided by this 55, sum of year. So 10 divided by 55 in terms of percentage into 100, 18.18 percentage. So 18.18 percentage. In first year it will be depreciated in 18.18 percentage. 18.18 percentage. In second year 1 2, 9 divided by 55. 9 divided by 55 into 100. In second year that value will be depreciated in 16.36 percentage. 16.36 percentage. In third year 8 divided by 55, sum of years. 8 divided by 55 into 100, 14.54 percentage. So 14.54 percentage. Okay. They given an example with value. The value of the new computer is 5,000. The salvage value is 200. Scrap value or salvage value both are equal. That the useful year is 3 years. Since we are getting back this 200, we have to minus in 5,000. 5,000 minus 200, 4,800. So we are going to find depreciating value only for 4,800, not for 5,000. Okay. You are going to write in reverse. 3 plus 2 plus 1 equal to 6 years. So this is sum of the year. In exam they may ask what is the sum of the years, like 0.5 marks. Okay. In first year means this one, 3 divided by 6. So 3 divided by 6 into 100. So in first year that value of the asset will depreciate at 50 percentage. 50 percentage of 4,800 is 2,400. In second year 2 divided by 6. 2 divided by 6 into 100, 33.33 percentage. So in second year that value will be depreciated at 33.33 percentage. 33.33 percentage of 4,800 is 1599.84. 1599.84. For third year 1 divided by 6. 1, 2, 3, third year, 1 divided by sum of the year 6. 1 divided by 6 in terms of percentage, 16 point, we can make it as 67, 16.67 percentage. So 16.67 percentage of 4,800. 16.67 4,800 into 16.67 percentage. So 800.16. So let's check the value. In first year 2,400, in second year 1599.84, in third year 800.16. So this is called sum of the digit. We are summing the digit, so this is called sum of the digit method. Next we are going to see about replacement of fixed asset and creation of sinking fund. The concept of creating a depreciation fund or sinking fund is every year our asset will be depreciated at some percentage. For example, what percentage it depreciating, that equivalent amount is kept in a depreciating account or in profit or loss account, so that at end of the period that asset we are using, we can scrap it out and we can buy the new machine. In last video itself we explained about this. Let's recall it. Machine of worth 1 lakh depreciate 20,000 every year. So every year 1, 2, 3, 4, 5, every year it depreciate 20,000. So in year 1 that value of the machine will be 80,000, year 2 60,000. So every year that value of the machine reduces to 0. So at the end of the 5th year we have to scrap the machine and we have to purchase the new machine. At that time investing on 1 lakh is difficult for a company. So every year what the amount is depreciating, we are creating a fund in a separate account. We are creating a fund in separate account. So this is called depreciating fund or sinking fund. At the end of the 5th year we can buy a new asset, replacing of a fixed asset, replacement of a fixed asset. At the end of 5th year we can able to replace easily. Next time, amortization of intangible asset. Depreciation is used to only tangible asset. Tangible asset means what we can touch and feel is called tangible asset. Intangible asset means that we can't able to touch and feel. For example, patents, license, trademark, computer software, these things we can't able to touch and feel. This is called intangible asset. Depreciation is used only in tangible asset. In case of intangible asset, we can't able to use the concept depreciation. Here we are using a concept amortization. The logic behind amortization is to reduce the value in every accounting year. Okay, this amortization is deal by Indian Accounting Standard 38. Okay, so unit 4 over. Thank you for watching video. If anyone not yet subscribed our channel, kindly subscribe, bookmark.